And good morning, good evening, good afternoon, students and traders. This is FXFreedom broadcasting you live on YouTube, and this is the Forex Trading Course 101. Remember everybody, this is the foundation course, and today we have one of my favorite topic. It's called What is your strategy part 1. Wow, very good everybody. Remember, trading is a learnable skill. When we learn in the correct way the three pillars, pillar number 1 is the market. We've been doing this now about for what, 7 months, 8 months, right? Maybe 9 months, you know. And hello Captain Yanis, if one opens a stream before start and does not refresh it afterwards, the stream video might not show. Thank you very much. Thank you very much. I'm going to save this message. I'm going to tell everybody. So message 1. Okay, thank you very much, Yanis. Hello Osman, how are you? So we've been doing, everybody, we're trying to understand how this market works for about what, 9 months, you know, with all the travels and the vacations, right? And starting from today, we are going to work more on number 2. You are going to graduate from this course when 1, you have your chart set up and ready for trading. This is not that difficult, right? Having your chart set up and ready, it's just, you know, choose what you like. Talking about the indicators, the tools, and just build your charts, it's not that difficult. Number 2, have your strategy in place. You understand why you win, why you lose. We are going to talk about this one today. Hello Allah, how are you? And number 3, you have a complete understanding on how this market works, so you can make an educated prediction. And we've been trying to learn about the market, right? With the basic module, beginner module, intermediate module. So starting from today, we are going to talk about your strategy, everybody. I'm going to tell you mine, you know, it's not a secret. I'm giving it for free to everyone who comes into the institutional course, the advanced course. And everybody, you can follow me on YouTube if you want. It's called youtube.com/c/FXFreedomFX. And remember, 90% of traders lose money in the Forex market worldwide. These streams are not trading or investment advice. Also remember, if your way is not working, why don't you try ours? And for homeworks or questions, you have my Gmail contact, my Skype contact, and you can follow me on TradingView. Okay everybody, so that being said, and from yesterday I had an email, you know, from a student, and he was asking if I cannot expect to make money. So this is from yesterday, right? If I cannot expect to make money this year, when can I realistically expect? And here is the answer, everybody. Good news, next year. Next year, if you learn well, you know, if you can come into the advanced course and learn the institutional traders tools, okay, I'm going to tell you a few things today, how institutions are addressing the business of trading, okay. Most of retail traders have not this, I mean, it's common sense, unless you work in an investment bank, or unless you worked on a hedge fund or some institution, you know, the chance of you knowing this are 0. Make sense, everybody? Retail traders don't have access to this kind of information. But in the end, it's nothing special. Osman, thank you for showing me the EMA setup last week. I have implemented its usage. Great stuff. Say that again. The YouTube address. Yeah, it's, I need to make it bigger. It's youtube.com/c/FXFreedomFX. Okay. Yeah, I need to make it bigger, right? So, okay, everybody. So yeah, one more time. All right, just give me a second. Just give me a second. Just give me a second. So it's youtube.com/c/FXFreedomFX. Like it, and of course, you know, it's www, right? www. Okay. FXFreedomFX. Okay, everybody. So, what is your strategy? Part 1. Now, we are going to talk about entry rules, and we are going to talk about trade management rules, trade management rules, and then we are going to talk about exit exit rules. Got it? Thank you very much. Trade exit rules, entry rules, trade management rules, and trade exit rules, everybody. And here on the left we are going to have, so this would be 1, okay, this would be 2, this would be 3, and here on the left we are going to have different trading styles. Okay, so we have what? We have the scalper, we have the day trader, we have the, those are the common ones, we have the swing trader, we have the system trader, also called discretionary system trader, we have the news trader, okay, and that not that common, it's the position trader. Okay, everybody, so you need to identify who you are as a personality. You know, are you, or do you like more being a scalper? Do you like more being a day trader? Do you like to be more swing trader or system trader? Whatever might be the case. But just be aware that those different styles, those are going to have different rules. Sometimes those rules are going to be similar, but many times are going to be different. Okay, now before we start, okay, what do an institutional trader know that you don't know as a retail trader? Okay, so here is the, okay, institutional trader approach, and you don't want to hear this, everybody, you know, because here this so interesting topic becomes boring. Institutional trader approach, okay, number 1, after building your strategy, you want to collect a minimum of 100 samples. Okay, this is the institutional trader approach. After building your strategy, you want to collect a minimum of 100 samples. And number 2, you know, why would you do this? Because you want to quantify the edge. Okay, number 2, why do you want to do this? Because no, it's a minimum of 100 samples. Why would you do this? Because you want to quantify the edge. Okay, when we are talking about the strategy's edge, quantify the Strategies edge. Okay, and number three, an edge is a statistically proven fact that your strategy produces more winners than losers through time. Okay, oh, it's too big, right? Edit label, proven fact, so strategy down, let's make like this. Okay, everybody, so you might know, do not know as a retail trader, but how institutions approach strategies. You know, it's the 1, 2, 3. Okay, so after building your strategy, you want to collect a minimum 100 samples. What does this mean? Whatever we are going to put in here, entry rules, and whatever we are going to put in here, trade management rules, and whatever we are going to put in here, trade exit rules, we are going to collect a minimum, most likely is going to be 200, 300 samples. And this is difficult, everybody. Okay, why is this so challenging? Because a sample, and we're going to write this down. Okay, just give me a second. This is number 3, this is number 2. So here we're going to put a rule. Okay, star. A sample trade is a trade with 100% same entry, same trade management, Brazilian guy talking English, trade management, and trade exit rules, and again star. Okay, so once you have your rules, you want to collect. Yes, they're also talking about backtesting, everybody. Okay, when you say, oh, you need to backtest your strategy, so we're talking about the same, just a slightly different vocabulary. Hello Dancy, how are you? So after building your strategy, you want to collect a minimum 100 samples. What is a sample? A sample is a trade, you know, so when you're going to have 1, 2, 3, 4, 5, those trades must have the same entry rules, you must enter in the same way, you must manage the trade in the same way, and you must exit the trade in the same way. Are we clear? Type in the chat, everybody. Yes, this is clear, or type in the chat, no, Freedom, it's not clear. If you are going to have some rules, and then you are going to, one trade is going to be with one entry rules, in the second one you are going to have a different rules, those are not samples anymore. Make sense, everybody? In order to confirm the edge, what is an edge? An edge is a statistically proven fact. You must do 100 trades all in the same way. 100 trades minimum, all in the same way. 100% in the same way. No exceptions. Okay? Investment banks know that, hedge funds know that. You know, proprietary trading firms, they know this. This is a knowledge that maybe, you know, you might know or you might not know as a retail trader. Make sense? Many retail traders are not consistently profitable because they are changing rules and they are changing strategies. And when you are changing rules, everybody, you are changing the edge. I cannot stress how important it is to understand this. Any questions so far? Until I drink my coffee. Two questions, everybody. Number one, type in the chat. Are we clear that you must do 100 trades all in the same way? And number two, do you understand that if you are changing entry rules, trade management rules, and exit rules, that you are changing the edge? And every single time that you change a parameter, you go back to square zero? And smash the thumb up button on YouTube. Help us with the YouTube algorithm, because most likely you won't find this kind of information anywhere. Freedom, why are you helping us? Because we are looking for traders, everybody. Me too. Make sense? Me too, personally. I'm part of a few institutions and we need fresh blood. We are looking for traders. Okay? Freedom, can you repeat please the last sentence? Okay, so let's write this down, right? Okay, let's make it up in here and in here and in here and here. So why sometimes takes years to a trader to become consistently profitable. We are talking about the edge. Okay, this is clear. Why sometimes takes years to a trader to become consistently profitable? We're talking about the edge because every single time we change a strategy parameter, we are changing the edge, so we go back to square zero. Somebody just typed, not on YouTube but on the other streaming platform, oh my god, I've been doing this for years. Welcome to the club, right? But this is good news, everybody. If you can understand this and if you can learn this, just follow the rules. This is the formula you've been looking, everybody, for. Okay? If you have acquired the basic module, market structure, highs and lows, trends, the beginner module, trend line, support, resistance, pivot points, candlestick formations, intermediate module, multiple time frames, Fibonacci, we're going to talk about crowns and news trading in the future. You cannot make consistent money until you follow those rules. This is the only correct approach. Make sense? Osman says, does it work when you enter at the high of a higher time frame hedge trade on a lower time frame, still learning the timing and exiting at the low of the higher time frame as a strategy? Osman, read the text and tell me what's the answer. See, everybody, once you understand the text that you are looking at right now, all your questions, like Osman's, are going to be answered. you know. And the golden rule, what makes the money, is this one. Number 3, it what makes the money in the market, not the trader. Not the trader. Today is a lesson, for most of you it's going to be an aha wake-up call. You know, like, oh, I was not aware. Everybody, not bunny, I'm sorry, not a bunny. Everybody, what makes the money, or who makes the money, is the strategy, not you, the trader. If you've been thinking, oh, I am making the money, you know, I'm sorry to tell you, what makes the money is the edge of your strategy. Everybody help Osman out. What's the answer? Does it work when you enter at the high of a higher time frame, hedge trade on a lower time frame, and exit at the low of the higher time frame as a strategy? What's the answer? Everybody, we've been telling you Mark Douglas's quote that we are not going to live and die on a trade by trade basis. You know? So starting from today, how do you know if something is working or not? What's the answer? Hedge fund trader Allah tried to help Osman out. Hedge fund trader Dancy tried to help Osman out with the answer. What's the answer? In the meantime, everybody, let's talk about, so are any questions before we start talking about the entry rules? Are any questions about the 1, 2, 3? Yes, and we're going through a storm, everybody, so if the stream goes down, it's because of the storm. Dancy, backtest it. So Osman, everybody, starting from today, every single time you have a question like, oh, does it work or doesn't it work, you know, the answer is you need to collect 100 samples. And shocker, right? Shocker in here. 90% of traders lose money. Why? Not everybody is willing to correctly collect 100 samples. This is hard work. And it's a minimum. Most likely it's going to be 200, 300. Here is the good news, everybody. If you can come to 100 samples or 200 samples and you have the numbers that your strategy has an edge, you can party because you are not going to be aware, but you become an instant millionaire. Wow, really? Yes, really. Why? Because institutions all around the world are looking for strategy providers, and if you have the numbers that you can show, they are going to throw money at you. Make sense? Oh, really? Yes, really, because 90% of traders lose. Okay, everybody? I'm going to show you something, everybody. Just give me a second. Just give me a second. It's just for you to understand. Look at this, everybody. This is the web page. It's called portal.berkeleyhedge.com, and estimated performance for September 20 calculated with reported data for everybody. You are looking at the results. This is not all over the world. This is just Barclays. You are looking at the results of 1,617 funds. And if you as a retail trader can have an edge, if you can prove, if you can do this hard work and prove to yourself minimum 100 samples, but they must be, everybody, this is the critical point I want you to understand, that they must be done in the same way, 100%, no exceptions. Make sense? It's not that you cannot do some different stuff, just it's not a sample. If you can come to 100 samples and show the numbers, that was the same entry, same trade management, same exit, and you have an edge, so it's a proven fact that your strategy is winning more than it's losing, you know, you become an instant millionaire. Why? Because looking here, you know, January red, February red, March positive. This is an average, right? This is the average of 1,600 funds. Okay, this is just from Barclay. So if you can beat those numbers, what do you think? Are institutions or investors going to? And here is estimate performance for August 22. It's 3,000 funds. I mean, those are big numbers. Make sense, everybody? If you can prove that you have an edge, what do you think institutions and investors are going to give you money or not? What's the answer? Okay, so let's talk about entry rules, everybody. Though, type in the chat how can you enter, or how do you want to enter into a market. Okay, what have we learned, right? What have we learned? We learned about, okay, so timing. Okay, talking about timing, we are using candlestick formations, we are using counter trend line breaks, we are using, now we never talked about, you can use stochastic if you want, stochastic, you can use MACD, you can use EMA cross if you want, okay, popular 21 and 8, you can use super trend, you know, and so on and so on and so on. So type in the chat, everybody, and homework until tomorrow, try to build your entry rules. Okay, so homework, right? Homework, not try, but build, right? Build your entry rules strategy. Okay, everybody, so we're going to clone this chart and we're going to go on the, what, 2 hour maybe? Just give me a second, where are we? Trade exit rules, there you go. Down here on the left, there you go. We are, most likely we are here. Okay, entry rules. Well, let's not do this. Okay, we are going to, so not this one. We are going to clone chart and just, we're going to do it like this. It's going to be better. And here we can go on what, 2 hour chart, 15-minute chart. Everybody type in the chat a chart, a time frame that you prefer, 1 hour, 2 hour, 15-minute, daily, weekly. Okay. And let's go on what? USD JPY, right? USD JPY, why not? Okay, USD JPY. So this is the chart if you want, USD JPY 2 hour chart. And here are the rules on how are you going to enter the market. Okay. Now, Exactly, thank you very much. I almost forgot. Okay, and 4-hour chart. Where is the... Oh, nothing here. Give me a second, everybody. Okay, Julius, 1 hour. Okay, so entry rules. Once you identify a pattern, okay, once you identify a pattern, then you go to timing. Osman, sorry, does position sizing come into this framework at this stage? Answer, yes sir. Yes sir. Yes sir. Okay everybody, so it's going to be like this. This is one, and daily, 4 hour, 15 minute, 2 hour, weekly. Give me a second everybody, and exit full screen. So the 2 hour chart and doc 2. We're going to play around a little bit with JForex. Okay, so this is one, and Julie says 1 hour chart. 1 hour chart, there you go. Okay, so this is the market right now on the 1 hour chart, USD JPY, just an example, right? Okay, so talking about the strategy. Number one, define what patterns are you going to trade. Okay, you can choose between monthly, weekly, daily. Okay, you can choose between market wave. Those are just a few: market wave, trends, candlestick formations, crowns, head and shoulders, pennants, flags, bats if you want, market wave, trends, candlestick formations, crowns, pennants, flags, bats, and so on. Fibonacci's, thank you very much, I almost forgot. Fibonacci's. Okay everybody, type in the chat what patterns are you going to trade. I want to hear from you everybody. Type in the chat what patterns are you trading. Market wave, trends, candlestick formations, crowns, head and shoulder, pennants, flags. And remember, this is just an example. Why? Because different trading styles are going to address the patterns in a different way. A news trader is not going to trade head and shoulders, make sense? A news trader is trading the news. A scalper most likely is going to scalp candlestick formations and it's over. Make sense? Now a day trader has a broader spectrum of patterns to trade. A swing trader has a broader spectrum to trade. A system trader is going to have just a combination of indicators. Does this make sense to you? Type in the chat everybody. Is this clear? I'm just giving you an example here. Okay? Those on the right, those are just examples. Freedom, what do you trade? I trade, everybody, the market wave. I trade so most of the time, right? Most of the time, number one, my strategy, my style is swing trader, long-term swing trader. My entries are on the 4-hour chart. There is no right or wrong. Okay, there is no right or wrong. So my entries are on the 4-hour chart, and I'm trading the market wave, most of the time 90% market wave and the Fibonacci's. And yes, my strategy has an edge. Dan says clear, Osman clear, Allah says clear. Okay, type in the chat what patterns are you going to trade. Somebody's asking what are flags and bets, and everybody. So pennants are this, right? Also called flags. You have a, I'm not sure if this is a bullish pennant or this is a bearish pennant, something like this, you know. Then you have this pattern in here too. It's going like this, you know, equal low, but you know, and then it's, those are different patterns that traders trade, you know. So this is like this, and most of the time, not always, the market is going to break up, you know. What is a bet, right? A bet is this. You have X, A, B, C, D pattern, so this would be a bet, everybody. Make sense? You're going to draw it, and most likely the market is going to gravitate to this level in here. Anyway, you need to learn the patterns. Make sense? You cannot trade effectively if you don't learn the patterns and the rules of the patterns that you trade. Dancy, shortened trend, Fibs, very good. Excellent, everybody. So out, 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 out. And let's make an example, everybody. Let's say that we are on the USD JPY 1-hour chart, right? And let's say that we are trading the short-term trend. Okay? Short-term trend, so extension, retracement, extension, retracement, not sure about this one, maybe extension, retracement, extension. Okay, so it's just an example. So we have, this is the chart, you know, and let's go on the daily. Let's go on the daily, maybe. Not the best example, right? Not the easiest one. I would love to see trend line. So this is one. Just quickly, everybody. 1, 2. Remember, you must not break candles and wicks, but just quickly to have some trend lines. Okay, trend lines, and there you go. This one. So this is from the daily, and let's go back on the 1-hour chart. Julius asked for the 1-hour chart. So our next trend line most likely is going to be this one. Just for the purpose of this example, right? Okay, now here is a combination, everybody. There is no right or wrong. Allah says long or short trend, Fibs, very good. Okay, so what is your entry strategy, everybody? Okay, now we have trader number 1. Trader number 1, we have trader number 2, and we have trader number 3. Okay, edit label. Okay, and those 3 traders are looking at the same chart. Okay, everybody. Now trader number 1 is going to have the entry strategy. Just an example. Entry strategy. He's going to enter. He or she is going to say, well, I want to see a counter trend line break number 2 with candlestick formation, and that's it. And that's it. Okay. Trader number 2 is going to say, well, you know, I want to have counter trend line break and candlestick formation, but I also want to see the stochastic indicator, you know. And trader number 3 is going to be a mechanical trader, so he or she is going to say, okay, I want to see, so it's a system trader, so I want to see, edit label, I want to see EMA cross, okay, EMA cross 21 and 8, and I want to see MACD in my direction, and I want to see stochastic U-turning in my direction. Okay, you have 3 traders, and we're going to put indicators in reset, simple moving average, dual. No, this one isn't here, so edit indicator, close price, not this one, need to out. So add indicator, exponential, moving average, direction, MACD, MACD not here, overlap stubbies, EMA, there you go, add and clone, and this is going to be 8, red, violet, whatever, right? Okay. Then she says counter trend line break plus trend confirm plus candlestick formations. Very good. So everybody, we are here right now, and trader number 1, he's going to, so those 3 traders are trading the short-term uptrend or the downtrend, for what matters. Those 3 traders are trading the same red pattern. So those 3 traders are trading the short-term trend, makes sense? And those 3 traders, they've seen that the market was making lower lows, lower highs in here, and all of them saw that the market changed direction. Do we agree, everybody, that the market was making lower lows, lower highs in here, and then the market changed? Do we agree? Start making higher highs, higher lows? Do we agree, everybody? Type in the chat, yes, I agree, or type in chat, no, I don't agree. So once we've seen, and then she says, well, I want to see a confirmed trend. So until the market was in here talking about the red one, then she was staying out and out and out, and bam, now then she has a confirmed uptrend. We've learned about this, how to confirm the trend. We have a minimum 2 highs and 2 lows, and the second high and the second low are a higher high, higher low. So starting from here, okay, we have a confirmed uptrend, and now the game starts, right? So the first trader is going to enter with, he or she said, well, I want to enter with counter trend line break and candlestick formation. So he or she is going to spread the trend line in order to have a counter trend line break. Just an example, okay? So he or she would enter when this candle closes. Double click, make it a little bit bigger. Okay, everybody? So this was the entry from the first trader, this candle, the big one. Okay? Then say yes, I agree. Ala says yes, I agree. When this trader went long, stop loss goes on the pattern traded, stop loss down in here, and risk reward ratio goes with the strategy, everybody. If I'm risking 1, I want to go after 2. Okay, so this is 1, and clone, this is 2. So this was the first trader. Now the second trader said, well, I want to enter with the counter trend line break candlestick formation, but also the stochastic. So let's see how let's see if the stochastic as an indicator was positioned in the favor of the trade. So this is a bullish candle, you know, up and down, you know, so it's here, counter trend line break. Now the stochastic, right, this one was in a sell zone. You know, when stochastic goes above the 80, it's in what is called in a sell zone. Okay, it's oversold. Make sense? Or overbought. I don't know which one which one is which one. You know, maybe it's overbought, so it's going to fall, right? Anyway, it's in the sell zone. So talking about collecting the 100 trades, this trader had no entry. This is the most important thing I want you to understand right now. The trader with the candlestick formation and counter trend line break, he or she entered. The trader number 2 here, who said, okay, counter trend line break and candlestick formations and stochastic, he or she has no entry with the stochastic. So he or she is going to wait and wait and wait and wait and wait and wait, and you need to know how you're going to use this one anyway. You know, he or she would enter here. You know, counter trend line break again. Okay, market is retracing, you know, 1, 2, 3 candles, counter trend line break, and here was the entry on this candle. And the third trader, just an example, the third trader says, which is a system trader. Where is, there you go. So we addressed trader number 1, we addressed trader number 2, but then we have here the third trader, which is a system trader. Okay, and he or she said, well, I want to see EMA cross in my direction, MACD in my direction, and stochastic U-turning in my direction. So this was the candle, and but this trader strategy, he or she doesn't care. Make sense? This strategy doesn't care about counter trend line breaks and candlestick formations. He or she does not care. Their strategy, they don't care. So EMA cross in their direction, yes it is. MACD in my direction. MACD at the moment of the previous 2 traders, MACD was down, but then MACD changed, right? So he would enter not at the same candle, but he would enter on the next candle. So maybe not this one, this one. So here we have a signal from MACD, but stochastic again would be a problem, because stochastic, it's in the sell zone. So this system trader would wait and wait and wait, and he or she, in the strategy, right, we're talking about the strategy, he or she would enter in here. Okay, depending on how you use the stochastic, here, down in here, we would see the stochastic, it's in the buy zone. Okay, MACD, it's in the direction of the trade, and the EMA cross, still, it's in the direction of the trade. Make sense? Now, all of them, let's get rid of the indicators and text on the line, and let's zoom out the chart, everybody. Now, all of them would win. Agreed, everybody? Type in the chat, yes, I agree, or type in the chat, no, I would not agree. It doesn't really matter what strategy, what entry rules those three traders would use today. All of them today, they would be still. Tomorrow it's another story, but today they would be in a profit. Do we agree on this, everybody? Here is a kicker. So yes, okay, they would, all of them, it doesn't really matter where you would enter, how you would enter. Have the rules in place, everybody. Why did they win? $1 million question for you. Why all of them won? You must, everybody, if you cannot understand this, all of this new knowledge, new information is not going to help you. Dance agree, I'll agree. How come all of them won? What's the answer? You are staring at the answer right now, everybody. What's the answer? Step by step you are going to connect the dots and you are going to understand why 90% of people, 90% of traders lose money all over the world. But if you can understand this, you are staring it right now. We talked about this in the previous lesson. What is the backbone of this business? I can give you my strategy. It has a confirmed, proven edge. Yes, play around with the charts, everybody. Backtest, collect samples. The strategy wins. No, sir. Because they follow the strategy. No, sir. Because they follow the strategy. No, sir. You must learn this, everybody. How come all of them won? So it's all the same, counter trend line break, stochastic candlestick formation, and this one just used indicators. How come all of them won? Number 3 is the answer, everybody. Number 3. Strategically follow the market. No, sir. Number 3 is the backbone of this business, everybody. All of the 3 of them, they have predicted that they are going to buy the uptrend. Make sense? If those 3 traders would have a vision that, just an example, if those 2 traders would have a vision that USD JPY, it's a sell for the week, it's a short. Make sense? They would look at the chart and they would say, oh, this USD CHF, those are just an example, but you need to understand this, USD CHF, it's at the all-time high, or it's a monthly resistance, or it's whatever. They follow market trend. No. Everybody, no. They predicted for the week that this market from Monday to Friday is going to go up. Make sense? If it would be that easy, just buy the uptrend. What, everybody, if this uptrend, it's a retracement, tomorrow it's going to be down in an extension. So the backbone of this business is you being an analyst. I cannot stress enough how much this is important. You cannot make money if you are predicting the market in the wrong way. You can have a strategy with an edge, but you are seeing the market in a wrong way. The strategy is not going to be shown to you. Why not, boss? Because you would be selling something instead of buying, and vice versa. Make sense? So yes, you are collecting samples, but you are this is the difficulty, everybody, of a retail trader. Yes, you are collecting samples, but until you are skilled enough to correctly predict minimum 50% of the currency pairs or 60% 1 week after another, the edge is not going to be shown to you. This is the secret why 90% of traders, with all the education, all the courses, are not making any money. That's it. Can you understand this? Type in the chat, everybody. Yes, I understand. You need to, so there are two parts to the business. Part number one is the backbone. You need to correctly identify the direction of the market from Monday to Friday. If you don't predict correctly, you make an educated guess. We are still guessing, it's a guessing game. If you cannot correctly predict 60%, the edge is not going to be shown to you. Why not? Because you would be buying something that is going down. So you must be first a good analyst, and then you go here and you have a transition period and you become a trader. Make sense? But no good trader is a bad analyst, believe me. I mean, come on, this is common sense, right? You know, I am a bad analyst and I am consistently profitable. Sorry to tell you, but it doesn't make any sense. This is the secret why most people all around the world are not making it. You know, they're going through one course, the next course, you know, JP Morgan course, Citibank course, whatever courses they make, you know, they learn new strategies which are okay, but they are not skilled enough to predict correctly the markets. It doesn't matter forex, stock market or cryptos. This is the logic behind. Okay, everybody, see you back tomorrow with What is Your Strategy Part 2. Remember the homework. Tomorrow I want you to type in the chat or send it to my email your entry strategy rules. How are you going to enter? Until tomorrow, stay strong and trade for freedom. Exactly, freedom. Don't trade for money, trade for freedom. This is FXFreedom signing off.